Exchange-traded funds, or ETFs, have revolutionized investing, offering diversification, lower costs, and flexibility. But how do ETFs work, and how can they help you grow wealth? Let's break it down. 1. What are ETFs? An exchange-traded fund, ETF, is an investment fund that holds a basket of assets, such as stocks, bonds, or commodities. ETFs trade on stock exchanges just like individual stocks, allowing investors to buy and sell shares throughout the trading day. Unlike mutual funds, which only trade once per day at the closing price, ETFs provide real-time pricing, giving investors more control. For example, the S&P 500 ETF, SPY, tracks the top 500 U.S. companies, giving investors exposure to the entire stock market with a single trade. 2. Why invest in ETFs? ETFs offer multiple advantages that make them ideal for all types of investors. Diversification. Instead of buying individual stocks, ETFs spread risk across multiple companies, sectors, or assets. Lower costs. ETFs have lower expense ratios compared to mutual funds, reducing fees and maximizing returns. Liquidity and flexibility. ETFs trade throughout the day, making them easy to buy and sell at market prices. Tax efficiency. ETFs minimize capital gains taxes, making them more tax-friendly than traditional mutual funds. 3. Different types of ETFs. There are several types of ETFs designed to fit different investment strategies. Stock ETFs track major stock indices like the S&P 500, NASDAQ, or global markets. Bond ETFs provide exposure to government, corporate, or municipal bonds. Sector ETFs focus on industries like technology, healthcare, or energy. Commodity ETFs invest in gold, oil, or agricultural products. Dividend ETFs focus on companies that pay high dividends for passive income. Thematic ETFs track trends like AI, blockchain, or electric vehicles. International ETFs provide exposure to global markets outside of the U.S. Inverse and leveraged ETFs, designed for short-term traders looking to magnify returns or bet against market movements. 4. How to invest in ETFs. Investing in ETFs is simple and requires just a few steps. 1. Choose a brokerage. Open an account with Vanguard. 2. Fidelity. 3. Robinhood, or any other platform. 4. Pick the right ETF. Consider factors like expense ratio, asset allocation. 5. And historical performance. 6. Check the expense ratio. Lower fees mean higher returns over time. 7. Invest consistently. Use dollar-cost averaging to invest a fixed amount regularly. 8. Hold for long-term growth. ETFs are best for long-term wealth building. 5. ETF investing strategies, buy and hold. Ideal for passive investors who want to build wealth over time. Core satellite strategy. Use a broad market ETF as your portfolio's foundation and add specialized ETFs for growth. Dividend investing. Select dividend ETFs to generate passive income. Tactical trading. Use sector rotation strategies to capitalize on market trends. 6. ETFs versus mutual funds. While both ETFs and mutual funds offer diversification, ETFs provide lower fees, no load fees, and most ETFs have expense ratios under 0.5%. Intraday trading. ETFs trade like stocks, while mutual funds settle at day's end. Tax advantages. ETFs are structured to reduce taxable events. ETFs are a powerful tool for diversified, low-cost, and flexible investing. Whether you're a beginner or an experienced investor, ETFs offer a simple way to grow wealth. Are ETFs part of your portfolio? Let us know in the comments.